It's Monday, August 12th, 2024, and I'm Dave Sobel. 4 things to know today. Wall Street jitters among weak job data. The tech giant's earnings underscores the cloud play. Intel's leadership crisis deepens with earnings miss. And private equity moves, Acronis, Trend Micro, and more. This is the business of tech. I'm back from my time off, and I'm only slightly sunburned, but also very rested. I'll work through the stories from my time away with you, so neither of us will miss any highlights. There's a bit of a ride from last week. The jobs data indicates a significant slowdown in hiring, with June seeing 5.3 million hires, down 314,000 from May, marking the lowest hiring rate since March 2020. While layoffs remain low, the reduced appetite for new hires reflects a cooling economy, impacting workers' confidence and job opportunities. And everyone freaked out as the S&P 500 fell 2.5% and Treasury yields fell. But as of this writing Monday morning, we're back to the levels before I even went on vacation. So, there's nothing to see here. And despite recent discussions about a potential recession due to that weak job report and market volatility, key economic indicators suggest continued growth rather than contraction. The National Bureau of Economic Research indicates that while job growth has slowed, it remains positive, and personal income growth has remained stable. Elevated recession talk may stem from the SOM rule, which links rising unemployment rates to recession onset, but historical patterns may not apply to the current unusual economic conditions. While caution is warranted, there is insufficient evidence to confirm that a recession has begun. And the 2024 Information Week U.S. IT salary report highlights that despite economic growth and high consumer spending, IT professionals face job stress and layoffs. 56% are satisfied with their jobs, but 42% feel overworked. Generative AI is seen positively, with many companies hiring for AI-related roles, while concerns about fake job listings and ghosting during interviews persists. CompTIA analysis shows that in July 2024, tech employment in the U.S. declined, with the sector losing approximately 9,162 jobs, reflecting a broader slowdown in hiring across the national labor market. While tech services and software development added about 4,000 jobs, telecommunications and cloud infrastructure losses offset these gains. The unemployment rate for tech occupations decreased slightly to 3.2%, contrasting with a national rate of 4.3%. Active job posting in tech exceeded 471,000 jobs, indicating ongoing hiring interest despite the slowdown. The Q2 Service Leadership Data Report indicates a slowdown in managed service revenue growth to pre-COVID levels, while MSP profitability remains strong, with an average adjusted EBITDA of 14.1%. Private equity-backed MSPs outperformed others in revenue growth, achieving 18.7% adjusted EBITDA. Additionally, fewer MSPs reported losses, and VARs experienced a 3.5% revenue growth after previous declines, although project and professional services revenue for VARs fell by 4.3%. Why do we care? Wall Street is a bunch of nervous Nellies, and day-to-day ignore their reactions. And remember, dips are both natural and sometimes good. They're buying opportunities if you're younger or looking to enter a market, and disruption is good for smaller players. Some volatility is a positive thing, and savvy operators remember that. The insight is to look for longer-term recommendations from economists as a better guide. Broad economy, growing. The MSP market is still growing. Sure, slowing, and let's acknowledge that, but not anything panic-worthy. Trinity Cyber offers MSPs a revolutionary new capability to grow your business and improve your margins. Trinity Cyber is the solution to an industry overly dependent on detective controls and over-optimized for incident response. It's time to go from reactive to proactive defense. Here's what Wayne Porter, owner of MSP Allegheny Computer Services, has to say.
With previous advanced threat protection software or intrusion prevention systems, Our only options were block and alert. But with Trinity, we can remove, we can modify, we can replace. And that's really what makes Trinity so unique.
Help your customers improve security, save time, and enjoy a higher service level. Visit trinitycyber.com/MSP4 to learn about their discounted MSP pricing options. I also want to review some earnings calls. Microsoft's cloud growth has slowed, with Azure reporting 29% growth below the expected 31%. Despite solid revenue and profits, concerns arise over AI spending and demand outpacing supply. Microsoft 365 Copilot showed better adoption, with a 60% increase in business customers, but high costs may affect long-term retention. Investors remain cautious due to significant capital expenditures, totaling $55.7 billion over the past year, as slowing cloud growth raises questions amid the generative AI boom. Microsoft's AI business has thrived by reselling OpenAI's models, with TikTok contributing nearly $20 million per month, accounting for about 25% of Microsoft's revenue from this sector, which is projected to reach $1 billion annually. Amazon Web Services reported a 19% revenue increase in Q2 2024, reaching $26.28 billion, surpassing analyst expectations. AWS continues to grow faster than Amazon overall, despite increased competition from Microsoft Azure and Google Cloud. AWS generated $9.3 billion in operating income, accounting for 63% of Amazon's total. The company plans to increase capital spending this year, focusing on acquiring NVIDIA GPUs for AI model training. The company plans to discontinue several less popular services while emphasizing support for generative AI. Apple's Q3 2024 earnings report showed better than expected results, with revenue rising 5% to $85.78 billion and earnings per share at $1.40. The iPhone remains crucial, accounting for 46% of sales, despite a slight year-over-year decline. The iPad division experienced strong growth of nearly 24%, while services revenue rose 14% to $24.21 billion. Apple anticipates similar revenue growth in the current quarter and continues to invest in AI and new services. And this quarter, the cloud infrastructure market reached approximately $79 billion in revenue, marking a 22% increase from the previous year, primarily driven by AI interest. Microsoft's Intelligent Cloud reported $28.52 billion, slightly below expectations, while Amazon and Google Cloud also saw significant growth. Amazon held 32% market share, Microsoft 23%, and Google 12%. And despite Microsoft losing some market share, it continues to grow substantially, and overall, the market is expected to double in 4 years. Enable reported a 13% year-over-year revenue increase in Q2 2024, raising its full-year revenue outlook to $464 million and adjusted EBITDA margin to 36%, with total revenue of $119.4 million. The company also announced that Enable Cloud Commander has enhanced its Windows 365 management capabilities. It allows managed services providers and cloud solution providers to manage Microsoft users, Azure resources, Intune, and Windows 365 from a single console. This integration facilitates monitoring and managing Windows 365 cloud PCs, including key actions and license management. Disclosure: I'm a shareholder. Why do we care? Well, cloud is where it's at with a booster for AI. Now, I want to highlight something. Big tech infrastructure players are achieving significantly higher growth rates than MSP-based technologies when looking at Enable or service leadership data. This is even at their scale. Achieving 29% growth in the raw numbers of Microsoft is impressive. So don't compare yourself to big tech players. Well, we have to talk about Intel. Intel's shares fell 26% after a significant earnings miss and a major restructuring announcement, impacting global chip stocks, including TSMC and Samsung. The company reported a net loss of $1.61 billion and plans to lay off over 15% of its workforce, or 16,000 workers. The layoffs will primarily affect research, development, marketing, and administrative roles, with most cuts completed by the end of the year. The semiconductor sector faces additional pressure from an antitrust investigation into NVIDIA, contributing to a broader decline in chip-related stocks. Additionally, Intel will reduce capital expenditures by over 20% and suspend its quarterly dividend starting in Q4 to prioritize liquidity. These measures will save the company more than $10 billion by 2025. And Reuters covers Intel's decision not to invest in OpenAI around 2017 or 2018 due to skepticism about the future of generative AI, contributing to its decline in the AI sector. While OpenAI has thrived, Intel has struggled to compete against rivals like NVIDIA and AMD, failing to develop a cohesive AI product strategy and missing key market opportunities. Despite attempts to create viable AI chips through acquisitions and internal projects, Intel's efforts have not gained traction. And Intel is extending the warranty on its 13th and 14th Gen Core processors by 2 years due to ongoing instability issues, bringing the total warranty to 5 years. While a patch is expected to address the root cause of the problems, it will not repair any existing damage, prompting customers to seek replacements for affected chips. Intel is committed to supporting customers through this process and will provide further details soon. Why do we care? Because Intel's leadership blew it. Poor product quality, incorrect strategic choices, and a continued decline in value. Is anyone really eager to have an Intel chip in your device? While I expect most IT service companies to view many chip manufacturers as irrelevant, as you're more interested in hardware manufacturers such as Dell, HP, Lenovo, or Apple, the value of Intel Inside is underwater. I wouldn't be pushing to replace them, yet I would also not forget that. And some money moves for vendors. EQT, the largest European private equity firm, will acquire a majority stake in Acronis, enhancing its growth vision and commitment to expanding its platform for managed services providers. The transaction, pending regulatory approvals, is expected to be finalized in early to mid-2025. Acronis serves over 20,000 service providers and protects 750,000 businesses globally, focusing on data protection, cybersecurity, and IT infrastructure. Trend Micro, the Japanese cybersecurity firm valued at approximately $9.9 billion, is exploring a sale after receiving buyout interest amid a weakening yen and stock underperformance. The company is working with investment bankers to attract potential buyers, including private equity firms, although no deal is guaranteed. Trend Micro's shares have declined over 10% this year, and it's competing with major U.S. rivals while reporting a 13% increase in second quarter net sales. Ruist has raised $45 million in Series C funding to enhance its robotic process automation platform and support for managed services providers. This follows a significant growth of 182% in annual recurring revenue and 204% in customer base in the first half of this year. The funding will be used to develop a new low-code app platform, expand educational resources, and improve the core automation platform. At the same time, the company plans to double its workforce from 100 employees within the next year to meet increasing demand. Why do we care? Acronis is a significant player in the MSP world that often goes unnoticed, and a new PE player has entered the scene. As I always counsel, there's no need to change anything now. Watch for any possible changes to come. And note, someone might buy Trend Micro now. Be amusing if those two combined, wouldn't it? Thanks for listening. It's International Youth Day, but it's also IBM PC Day, as the PC was introduced on August 12th, 1981. We can celebrate with National Gooey Butter Cake Day. If you have a question you want answered, we take listener questions. Send them in, ideally as a voice memo or video, to question@mspradio.com. I answer listener questions live this week on Thursday at 3 p.m. Eastern on YouTube and LinkedIn. And if you got a comment or a thought on a story, put it in the comments if you're on YouTube, or reach out on LinkedIn. if you're listening to the podcast. I'll talk to you again tomorrow.
The Business of Tech is written and produced by me, Dave Sobel, under ethics guidelines posted at businessof.tech. If you like the content, please make sure to hit that like button, follow, or subscribe. It's free and easy and the best way to support the show and help us grow. You can also check out our Patreon, where you can join the Business of Tech community at patreon.com/MSP Radio, or buy our Why Do We Care merch at businessof.tech. Finally, if you're interested in advertising on the show, visit mspradio.com/engage. Once again, thanks for listening to me. I will talk to you again on our next episode of The Business of Tech.
Part of the MSP Radio Network.